There are 5 things you ought to know about the Inflation Reduction Act. Hi, I'm financial planner Sean Mullaney. Let's discuss. So today is August 8th, and over the weekend, the Senate passed the Inflation Reduction Act. Now it goes to the House, and they're scheduled to consider it on Friday, August 12th. It's very likely going to pass. We'll talk about that at the end of the video. But there are 5 things you should know about this act. The first is a big one. It extends for 3 years, 2023, 2024, and 2025, the Affordable Care Act Premium Tax Credits, such that the 400% of federal poverty level cliff is suspended again for those 3 years. Recall that before 2021, there was this cliff on ACA Premium Tax Credits. Over that 400% of federal poverty level, guess what? You lost all those premium tax credits. Could cost thousands of dollars to be over that 400% of federal poverty level. Well, in 2021 and 2022, Congress said, all right, we're going to suspend that cliff, but just for 2 years. So there's a lot of pressure to say, well, in 2023, those things are going to come back. Well, that cliff is gone for at least 3 more years. It comes back now in 2026. So that's a big victory for the self-employed who use Affordable Care Act plans. Big victory for early retired folks who use Affordable Care Act plans. One of the nice things for the early retired is it means Roth conversions don't have to be as precise, right? A lot of folks get to early retirement and they like to do these Roth conversions where you move money from a traditional retirement account to a Roth account. And it was a problem because, wait a minute, what if I over convert and I get myself over that 400% of federal poverty level and now I lose my ACA premium tax credit? Not a good outcome. So this is a nice victory for some who are self-employed, some who are early retired. Those things, in terms of the suspension of that 400% cliff, we get 3 more years of that. Okay, second thing is plug-in vehicle tax credits. This is an interesting one. So they make some changes. First change is generally favorable for folks who are looking to use or buy a new electric vehicle. It says that 200,000 cap per manufacturer. So like Tesla, for example, they'd sold more than 200,000 electric vehicles. So folks couldn't get a plug-in tax credit for a Tesla of $7,500. Well, they said, all right, we're getting rid of that. But they put in a new requirement that I think folks are going to have to dig in on. This is a really interesting thing. We don't know what's ultimately going to happen with this thing. But what they're saying is these critical minerals and components that help do the batteries for these electrical vehicles, those are going to have to be increasingly sourced from the United States, North America, or one of our 20 free trade agreement partners around the world. And it turns out a lot of these components that go into electric vehicle batteries today do not come from the United States and don't come from North America and our free trade partners. So it might be that, wait a minute, you can buy an electric vehicle all you want, but a lot of the battery components are going to come from China and other places we don't have free trade agreements from, so nobody's going to be able to get a plug-in tax credit for these things. We're not exactly sure where this is going to all fall out. It might be that they're able to move and get extraction of minerals from Canada, Mexico, the United States, these sorts of places. We're going to see, but it might be that as a result of the Inflation Reduction Act, fewer and fewer people are going to get that $7,500 credit for a new electric vehicle. Some that bears watching. I really don't know where that's going, but very much bears watching. The third thing is the Inflation Reduction Act hires 87,000 new IRS agents. And now apparently some of them are going to be dedicated to customer service. That's a good thing, right? There's lots of call delays and you never get your call answered if you call the IRS at times right now. So that's a problem. And so apparently this bill might help resolve some of that. We don't really know. But it will step up IRS enforcement and audit activities. And look, getting audited by the IRS is not a good outcome for anybody, regardless of their tax situation. And so I think this is going to prove somewhat unpopular, and I think this thing could get reined in by a future Congress or even repealed by a future Congress. I think that's actually a possibility. We don't know yet. I think this is really going to affect folks with small to mid-sized businesses a lot more than W-2 folks, right? There are a lot of W-2 folks out there. Most of their tax return is based on third-party reported documents, a W-2, a Form 1099 INT for interest income, a Form 1099 DIV for dividend income, right? So a lot of their income is third-party reported to the IRS and to the taxpayer, so there may not be a lot to fight or audit there. And then 90% of Americans today take the standard deduction, so there's nothing to fight over or audit there. So I think that means that a lot of this audit activity that comes up because of this, expansion of the IRS workforce would just by definition have to go to small and mid-sized businesses. And nobody, particularly anybody with a business, wants to go through an IRS audit. That's a painful exercise. Now, a couple things to keep in mind. Like I said, one, I think there's going to be some political pushback in the future on this. Future Congresses might really scale this back. And then the second thing to keep in mind is this is not an overnight situation, right? No employer in the world, including the Internal Revenue Service, can just magically hire 87,000 people overnight, right? This is going to be phased in, and I think we'll see audit activity increase. Right now, it's still a very low level, so that's something to keep in mind too. This is going to be phased in over a year or two at least, I think. But again, obviously nobody wants to get audited by the IRS, so this may ultimately prove not so popular, and maybe it won't last. We'll see. Fourth thing to keep in mind about the Inflation Reduction Act is there was no repeal of the backdoor Roth IRA and no repeal of the mega backdoor Roth IRA. I'll put a link to my prediction video from early in 2022 on backdoor Roth IRA and repeal. It's not looking like the backdoor Roth IRA is going to be repealed anytime soon. So that's some good news for taxpayers. And then lastly, that SALT cap, right? So folks are familiar, you can only deduct up to $10,000 of state and local taxes on any one tax return under today's rules. That lasts through 2025. I suspect it's going to get extended beyond 2025. Inflation Reduction Act does nothing to that SALT cap. Doesn't change the amounts, doesn't change the years that it comes into play. So I think that's here to stay for at least a little while longer, maybe a lot longer. But no change to the SALT cap, no increase, decrease, no nothing. It's still $10,000, and that lasts through 2025. Okay, so where do we stand after all this? Where does the Inflation Reduction Act stand? It goes to the House. The House comes back on Friday, August 12th. I suspect that the House will pass it on Friday, August 12th, or shortly thereafter. The big driver is that first point I made, the ACA Premium Tax Credits. Politically, the Democrats do not want those things to go away in 2023 so that people at 500%, 600% of federal poverty level all of a sudden get zero for their premium tax credit. That would be a bad political outcome. So I think the House is going to pass this. That's my prediction. I'd put that at like 90%, maybe a little higher. You never know. Nothing's permanent, nothing's final yet, but I think we could start thinking about a future where the Inflation Reduction Act does get enacted and does become law. Let me know what you think in the comments below. If you like this video, please mash that like button and subscribe to my channel. See you next time.